Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be talking about a very high yielding dividend stock that I wish I would have purchased more of. The company is currently one of my best performing holdings within the portfolio, and I definitely did not expect that when I first purchased the stock. Before we do get into all that, let's take a quick look at my portfolio dashboard, and if you guys are really attentive, you may have noticed that the portfolio value and the total invested is the same as my video from last week. That's because by the time you guys are watching this video, I'm actually out of town, so I wanted to make sure I pre-make a video for this week. So for those of you that did miss last week's video, you know what you have to do after you finish this week's video. But as a quick recap, I did invest almost $53,000 into the portfolio, and my current amount invested for this year is over $18,000. My portfolio value is at $70,648, but I'm going to make a prediction and assume that the actual value this week is probably lower than what we're seeing here. Now in terms of gains, I'm at $17,700 of gains, or a 33.55% total return, with almost $2,000 worth of dividend income invested in the portfolio. Now going forward, I am projected to earn $1,107 per year from my portfolio, and my portfolio yield is at 1.57%, or a 2.09% yield on cost. Now before I reveal the company, if you want to make any guesses below, do so right now. So without any further delay, the company that I am talking about in today's video is Altriagroup, ticker symbol MO, and I bring this up to show you that it's actually one of my biggest dividend payers in the portfolio. So first of all, sorting my portfolio from highest total return all the way to lowest, you can see that my number one spot is Microsoft at almost 130% total return, and then we have MasterCard following that at 85.4%. But in third place, surprisingly, is my highest dividend yielding stock, Altriagroup, at almost an 80% total return, which is unbelievable. Now this is one of my first individual investments in the portfolio, and you can see right here that I made a relatively small investment at under $1,000. Now the reason the investment looks to be on the smaller side is if we go to one of my older videos, you guys can see right here that at the time I had purchased 22 shares total when I finished this position, and with dividends reinvested I was at 22.618 shares. This is the first video I ever posted on the channel. Now the market value of this entire position was right under $900, and my portfolio weighting at the time was 3.3%. Now this is after actually a drop in stock price. I believe my average price paid was closer to $46. At the time I think it was trading around $43 per share. So my initial weighting into the position was actually almost 4%. Now if you guys do keep up with the channel, you know that I prefer to have stocks at or under 5% of my portfolio value, especially something like this that's a more risky and higher yielding position. For those of you that don't know, Altria specializes in selling tobacco products, which is an industry that has been slowing down the past couple of years and does not seem to be improving too much. Because of that, the industry faces a lot of risks and they rely heavily on pricing power. In order to manage my risk in investing in such a position, I made sure to keep it a smaller holding in my portfolio, and as my other stocks have grown over time, this one has become even smaller of an allocation relative to them. At the time of recording this video, the company was trading at a yield of 9.77%, and you'll see pretty soon the yield now is much lower than that. My yield on cost was actually at 8.87%, and that's because I bought the stock price for a higher amount than the currently trading at price. So moving into my order history section, you can see right here all the companies I've ever purchased and when I purchased them. So VOO was my first ever investment, and at first I was only buying VOO, and then I began buying schd as well as another ETF to complement it. After that I started buying some individual stocks, and you can see that I quickly bought Altriagroup as one of my first ever individual holdings. My initial purchase was only one share at $42.82, and that's because I was looking to both increase my overall dividend yield in the portfolio. I wanted something that was higher dividend yielding than the rest of my portfolio. The other reason was I believed it was trading at a pretty steep discount. I think the company does have its struggles and it has its work cut out for itself, but I do believe it was trading at too big of a discount to pass up on the time. So filtering out for only Altriagroup, you can see that I began pretty slow here, and that's because my portfolio value was very small at the time. This is in 2022, which is about 3 years ago now. So for 2022, I just made one purchase, then I made a small one in the beginning of 2023, and then in 2023 is where I purchased basically the rest of my position, which is the majority of it. I was paying up for some of these shares. You can see I was paying $44 for some of them, but as the price started dipping back down to around $39, $38 per share, I tried getting a couple more shares at the end. Now at this point, because of the factors that I mentioned before, such as the high dividend yield and the higher risk, I definitely didn't want my position over the long term to be more than about 2 to 3% of my portfolio value. So we'll take a look at my individual holding in just a second, but basically I have been able to balance out my allocation for Altriagroup where I kind of like it between 2 and 3% for quite a while now, so I am still pretty happy with that. So my average price paid was $43.29, and the current price is sitting at $65.82, and a lot of these gains came from this year alone. Hopping into Google, we can see its price action over the past couple months. So year to date, it's actually up 25%, which is well outperforming the S&P 500. And in the past year, it's up 28.25%. And that's not including the 6.2% dividend yield that it does have. Now, if we zoom out to a 5-year picture, we can see the troubles here, and kind of the reason I began buying shares is because the price was sitting pretty high at $56 per share, which I believe was a bit overpriced for the time, and because of that, I corrected pretty significantly all the way down to these $40 levels that I did start purchasing shares at. So from the end of 2022 until 2024, the stock was basically trading pretty much flat for a couple years, and I think this is a good opportunity to accumulate some shares in the company if you did have that faith long term. Now for me, I did take advantage of this dip, and like I was showing you guys, my average price paid is $43, and at the time that was basically between an 8 to 10% dividend yield. I do believe at the bottom when it was trading at $38 per share, I think you could scoop up some shares for about a 10% dividend yield, which is absolutely crazy. So during this time period, I was able to scoop up 22 shares of the company, and I've been reinvesting my dividends ever since in order to get more shares of the company with just those dividends alone. Because of that, I have 26 shares in the company, 4 of which were purchased just using that dividend income that I earned. In total, I invested $952, and at the time, like I said before, this was a pretty substantial amount for me to put into one company. If you look at my Microsoft position, I only invested about $900 into that as well, and so those were some of my larger positions at the time. Now, when I bought this company, I was just expecting to be able to diversify my portfolio and raise that portfolio yield. I was not expecting to have such strong returns like I've seen so far, and I'm pretty happy to see that. Now, short-term price movement doesn't matter too much. If the stock price does end up crashing 2 years from now, or a year from now, or 5 years from now, then all these gains don't matter. They're currently unrealized. But if the stock price stays steady or continues to grow slowly, this will be a pretty good investment for me. My current value sits at $1,700, which is a $760 unrealized gain, or an 80% total return. Now at the prices I was buying it at, to remind you guys, at a 9% dividend yield basically, if the stock price even remained flat, I would be getting 9% a year in return just based on that. So far, I have earned almost $200 with the dividends, and like I talked about before, that's how I invested back in and got 4 more shares of the company. Each share pays me $4.08 for dividend income per year. My annual payout is over $100 per year. With current prices, that's going to get me over 1 share per year, or if the prices drop, maybe even 2 shares per year. All this dividend reinvestment and accumulation just helps me compound my dividend income even faster. The current yield sits at 6.2%. My yield on cost is at 9.43%, and that's the main reason I originally invested in the company. Now, I never recommend anybody chase this yield when they're making their investment decisions, but for me at the time, it made sense for more than just the yield. The way I saw it is the company was trading at a discounted valuation, so even if the company's stock price remained the same, then I would be getting about a 9 to 10% return just based on that dividend yield. Now, if you factor any sort of price appreciation, that can easily climb up between 10 to 15% per year, which is kind of what we've seen right here with my 80% total return so far. Now, the current allocation sits at 2.4%, and I know I said that I regret not purchasing more, and I kind of do. You always kind of regret not purchasing more of your winners, but at the same time, I'm very comfortable with where the allocation is right now. My main goal for this position would be to keep it between 2 to 3%, and that's kind of where I'm happy to see it at 2.4%. Now, if my allocation is holding drops substantially because the stock price dipped down, then I would consider adding more into my position. Now, taking a look at my dividend calendar, what I want to show you guys here is the dividend growth over time. So right now we're looking at 2025, but let's first hop into last year's dividend calendar for 2024. Now, the reason I want to take a look at this one first is because it really highlights how this dividend has grown over time. I have not added any more shares into my position in 2024. You guys saw the last purchase was in 2023. That means that the only way these dividends have grown over time is because of those dividend reinvestments, as well as any dividend increases that company does announce. So in January of 2024, I got paid out $22.17, and that increased to $22.69 in April. From there, July paid out $23.19, and October paid out $24.64. Which brought my total up for the year to $92.69. Now, fast forwarding into this year, you can see that it's already paying me $25.14 in January, $25.64 in April, and now $26.08 in July, and this is just going to continue compounding over time. Just looking at January this year versus January last year, it's basically a $3 increase, and though it might seem small, over time it's going to have a pretty big compounding effect. This is definitely a company that I'm hoping to be able to hold long term because I want to see how this grows over the long run. Now, before we do end this video, I do want to take a look at some of their financial metrics, and what you can see right here is the revenue per share has been growing over time, but at a relatively slow pace. Like I mentioned before, the industry is definitely slowing down, and they're keeping up by mostly doing price increases, but they are trying to diversify their portfolio as well. The earnings per share have been all over the place. Since 2016, they've decreased substantially. 2019 was actually a negative year, but now in 2024, they've been climbing up pretty slowly over time. I do like where the trajectory is headed, so we'll have to see if they can keep this up going forward, but their free cash flow looks pretty healthy as well. Now, if we take a look at their free cash flow versus stock-based compensation graph, this is a beautiful picture. You can see their stock-based compensation is basically non-existent, meaning that they're able to keep the majority of their free cash flow. Because of that, they're able to return value to shareholders via aggressive share buybacks, which reduces their shares outstanding and increases your per share metrics, and also increasing their dividend income. For their net income margins, they're actually relatively high because they have a lot of pricing power with their tobacco products. Even though demand is going down, the people that do purchase those products, of course, are willing to pay a lot of money. Now, their capex is relatively low. They don't have too many avenues to reinvest back into the company at the moment, though they are trying to figure that out, but the return on invested capital is pretty high, so if they can find better ways to invest their capital, it could actually be really good for the business. Now for me, I'm definitely planning on continuing to hold my position for now, though I think the valuation is beginning to get a little bit stretched. I think because of the risks associated with the industry, I'd want a bit of a margin of safety if investing in a company like this, and for me, a 12 PE for a company like altriagroup is actually pretty fair right now. I personally wouldn't sell my position over this, but I also would not be adding to it at this time. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my position in altriagroup and how I purchased my shares. If you did make it all the way to the end of the video, let me know down below whether or not you own any shares in this company or if you're planning to make a position in the future. If you haven't yet watched last week's video where I talked about all the updates that super investors have been making their portfolio, check out this video right here. And if you want to see the video before that where I talk about Warren Buffett and Berkshire Hathaway buying United Health Group, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.